It's 6 o'clock in London, it's 1 p.m. in New York, 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where in the world you are today. My name is Patrick L. Young. The IPO-VID Livestream, Series 12, Episode 3. That is no fewer than Episode 69 starts here. Well, first of all, let me say it was fabulous last week to be in London. As you know, we recorded a great show with Ivan Steria from the Macedonian Stock Exchange, although he was, of course, all the way back in Macedonia at the time. We were in London for the AFM conference. It was an absolutely fabulous 23rd annual conference at the Danubius Hotel in Regent's Park, London, just beside the great home of cricket, Lord's Cricket Ground. I had the honour of being the opening keynote speaker, and it was a delight to be there along with a panoply of notable speakers. Thank you also to my fellow panelists, Will Mitting, Haranda Misra, and Chakavan Terashirai of the Thai Futures Exchange. And thank you to the organisers, Christy Kaj, Pat Kenny, Paul Constantino. It was a brilliant hybrid conference. All I can say is I'm really looking forward to seeing so many more of our South African colleagues and our colleagues from Asia at the next AFM event, face to face. Unfortunately, the AFM conference got off with a little bit of sad news. We have had the world of exchanges enduring a torrid quarter with the deaths of great names, Brian Taylor, Chris Pryor-Williard, and now, alas, Otto Negli. We published a tribute to Otto Negli, and you can read that on LinkedIn and Medium. Otto was really a very, very special man. He was perhaps best known for his stewardship of Sofex, the Swiss Futures and Options Exchange. He was also later the chairman of the Swiss Futures and Options Exchange. And of course, he was one of the people who was instrumental with Jörg Franke in the merger of Sofex into Deutsche Terminbörse to create Eurex, the continental European powerhouse futures exchange to this day, where he served as deputy CEO from 1998 to 2001. It was an illustrious career. He made such an impact across the world, both the emerging markets and the established markets, all with that delightful Swiss accent at all points in time and a cheery countenance. I can well remember sitting in the Turkish Airways lounge at Istanbul airport when we were both waiting to fly back to Zurich after a great FESE conference, as I was leaning over to get myself a piece of Sacher Torte, for that is, of course, my want to have something chocolate at all points in time. There he was, already at the Demel cake stand, enjoying his Turkish coffee, a beer, and indeed a cake. What ensued was one of those magnificent flights. Otto was a character, whether he was the chairman of the CME Europe Clearinghouse or in any of the other multiplicity of positions he occupied. He was a titan of the exchange industry. We knew he was very, very ill in recent months, but frankly, that doesn't make it any easier, ladies and gentlemen. Thank you, Otto. Farewell, my friend. Last week, on a happier note, I discussed the Magnificent Seven. We were looking at the top 7 salaries in the parish of exchanges. That included, of course, Terry Duffy, Adina Friedman, Jeff Sprecher, Leah Lesky, Nicholas Agassiz, Howard Lutnick, and Ed Tilley. All of those people earned more than $10 million for their efforts with the leading exchanges in the world last year. A very elegant chart to boot. Wonderful infographic from the team there. Those stories as well were on LinkedIn and Medium. Now, today, we've published an update. So from the Magnificent Seven, we move on to what I've termed the Ocean's 11. The Ocean's 11 this year are not picked because they are the 11 next highest earners. They simply happen to be some very interesting people that we thought it was interesting to compare on a data basis. So welcome to the Ocean's 11, David Schwimmer of the LSE, Theodor Weimer of the Deutsche Börse, Rich McVeigh of Market Access, Lobin Chai of Singapore Exchange, Akira Kiyota of the Japan Exchanges Group, Stefan Bujna of Euronext, Peter Jackson of the New Zealand Exchange, and Leila Fury were amongst those who were chosen for the Ocean's 11. It's not a scientific listing of the next group of CEO salaries, but nonetheless makes for interesting reading. You can find that on Medium and LinkedIn. And of course, it's already been published in the water cooler of the Bourse Business, Exchange Invest, which you can get daily to your inbox and join. In fact, the Magnificent Seven and the Ocean's 11, who are daily readers and subscribers to precisely that newsletter. Our guest today, ladies and gentlemen, is an old friend, Max Butti. Max Butti is a man who's developing digital assets these days. Massimo has worked for investment banks, prop trading firms, market makers, and exchanges in trading product and market development, cooperating closely with buy-side and sell-side traders, analysts, and portfolio managers, and helping create markets and strategies to support them. Nowadays, he's working for SDX, the Swiss, and that D is not for derivatives, ladies and gentlemen. It's for digital. The Swiss Digital Exchange, where he leads the equity team dedicated to enhancing the funding process for private companies and improving the issuance, custody, and transfer of digital securities in SDX's regulated CSD. Prior to SDX, Massimo spent, an illustrious career with all manner of names, including 7 years at the London Stock Exchange Group as head of equity derivatives markets and global account director, developing key strategic group accounts, amongst many other positions. Max, greetings. Welcome to IPO-VID Livestream. Where in the world are you today?
Good evening, Patrick. I am in Zurich at our offices in the fashionable Zurich West. And if you allow me, I just wanted to pay tribute to Otto Nägeli because, as you know, I started off at Sofex when Sofex launched, and in no small part, people like me and people of my generation owe their careers to people like Otto. So he will be sadly missed. He was a visionary. He was an innovator, and I like to think that in Switzerland we are still innovating, and we're still pushing forward innovation in financial markets and in capital markets. And SDX is perhaps an expression of that vision.
Well, there you go, Max. Doing something in Otto's name is always a good thing. I think one of the things that's great about Otto was he was such an innovator, he was such an advanced thinker, but he just always appeared like such a reasonable guy. I mean, he was the man you were happy to have a beer with at the same time as you were happy to have a high-level technological architecture meeting or a management meeting or a product meeting. He really, really was a super character all round.
Yes, indeed. And again, I think that he embodied this Swissness in business, being reasonable and being innovative, but being also ready to plant your feet firmly on the ground. And I guess that this is a little bit the premises around SDX. And I know you're gonna ask me more about this. Is there anything in particular you want to know?
Well,
with that.
On that, let me say, ladies and gentlemen, if you've got any questions you'd like to know about the Swiss Digital Exchange, now's the time to ask. We've got 1 hour with Max Butti. We've got 52 minutes to go precisely, and it will be lovely to receive your questions, or indeed a little bit of love if you'd like to give us some encouragement so that we can get this up the artificial intelligence rankings. Let me just say also, before I go back to Max, good evening, Peter. I hope you're on the sofa with Ari this evening. I hope all is well in your world. It's lovely to see you once again. Thank you for joining the show. Hello, Liam Maw as well. Great to see you, Liam. Thanks very, very much for being such a regular viewer. If you've got a question, of course, we will look forward to them whenever you wish to ask them. So let me, kick that off. SDX. First of all, I suppose you've hit on a couple of words which I think are quite interesting, because you've talked about already, in the name of Otto, being innovative. And in fact, the Swiss exchange being innovative, which I think is absolutely true. But it's not necessarily something that people who, I suppose, are used to the caricature of Swissness might necessarily wake up to in the morning and think, oh, that's inimitably Swiss, Max.
Well, that is true, but again, but it's also a little bit stereotypical, and I think that like in all stereotypes, there is a grain of truth. As I said before, in Switzerland, the business philosophy is to look forward and to use the best tools available to make sense of the new world, but also to really bring a better way of doing things to the capital markets and to financial services in general, and that translates, for example, in being particularly attentive in market infrastructure, in the way markets operate, in creating accessible and fair markets, and I think that when the DLT technologies started to come to the fore in finance about 8-9 years ago, as a technology tool, the Swiss market started to take notice and started to wonder and started to look at how they could use this technology to improve and innovate. So the awards you're referring to, I guess, are for 2 milestones that came out of that thinking and came as a consequence of the launch of SDX. One was because SDX is a regulated exchange and a regulated CSD, the first one of its kind in the world. And the second was because we were, in November last year, the first exchange to list a bond, a traditional bond, in full digital format, in native digital format. What that means is that bond replicates and mirrors the characteristics of a real bond, but it exists only as a cryptographical rendition. It is deposited on a node, and it's not dependent on any piece of paper whatsoever. It runs on DLT lines, so distributed ledger technology rails. That means that every time a transaction happens on that bond, all the wallets that we still call accounts in our environment, connected to our network, are updated at the same time. So you have this immediacy of information, transparency, and you have something that we call atomic settlement, which is basically a instantaneous settlement of that transaction on that bond, which is clearly a step forward compared to the current settlement cycles of exchanges. It eliminates counterpart risk potentially. It also creates new challenges for custodians and for payment agents. But it is a new way to adopt technology to innovate and to propose something different. The objective is to, going forward, use the same technology to list more assets, make more assets available, open up the variety of assets listed on our CSD, make the process easier, but also on the long run, use this technology to lower the cost of maintenance, cost of access, cost of maintaining positions on exchange, but also cost to distribute information and to make operational decisions and risk management decisions in financial markets.
Very interesting. Let's just unpick that for a second. When you're talking about this instantaneous or atomic settlement, what's the actual lag time and how long it takes to settle a transaction?
Well, we always say that the transaction and the settlement are, for all intents and purposes, the same thing. Is not entirely true. There is a time lag that could vary between minutes, seconds, and minutes. This is how fast it is.
Certainly, it's very interesting. It undoubtedly reduces 95, 98% of all the possible risks that you get in between. Yeah, fascinating altogether. And certainly that was an amazing first issue that you had with the bond. We have a question here, which, well, what will regulated 6 SDX do, says HV, against such an evil unregulated crypto markets, mostly run by bucket shop-like broker-dealers listing 99.9% unregulated and unregistered securities? Is the clue in the question there, Max?
Well, that's a very good question. I won't be dragged into a polemic on this. No, jokes aside, what we do is being regulated, and what we do is at the essence of eliminating the uncertainty and eliminating the opacity connected to these less stable participants in the market. However, I must say one thing is that we don't have to conflate and confuse two things. The crypto market and these unregulated exchanges and brokers, broker dealers out there are not in the same space we are. And also they do not trade and list the same assets we do. For all intents and purposes, we are a very traditional exchange. We translate in digital format traditional securities, bonds, shares, certificates. We use digital representations of these ownership rights and economic rights. We use the technology to transform them to transform these securities into digital securities. But we are not in the market, in the cryptocurrency market. We are not into the NFT space. We are not in the most exotic areas of DeFi. Our role is very much to, and going back to the Swiss philosophy, to adapt something traditional, use a new technology, and start leveraging on the benefits of the technology, bring stability, bring order. We decided to be a regulated exchange. It was a choice. It was a very long process. Clearly, you can imagine we had to go through from scratch, from the start through the regulatory approval with the Swiss authorities, with FINMA. We were not grandfathered, although we are part of a large traditional exchange group, SIX, with its own regulatory licenses. We were not grandfathered. We started from scratch, and we wanted to achieve regulatory approval exactly to start addressing, not solve the problem, boil the ocean and do it all in one go, but start addressing one of the main problems that people have with digital securities, which is, again, conflating cryptocurrencies with everything else that is digital, and also provide regulatory stability and visibility and transparency to all the institutional investors who want to access these products. And again, we, by choice, started by tackling institutional investors. Our products are available to expert investors. They are not retail products. They come with very strict requirements in terms of access. And again, it's by choice, because we want to build markets that are stable on the long term. We want to build confidence in these products. We want to take small steps towards a point where we can really start democratizing markets and democratizing access to securities.
So this is very interesting. You want to democratize the access to securities and so on, but what you're doing is you're starting by building an institutional-only market.
Yes, because we think that is perhaps the best way to then get to bringing digital securities to the masses, if you want. But we think it's better that way, because it brings confidence. Because again, we chose to do that, although it was hard. It was harder. We could have been unregulated and be out there competing for a completely different kind of business, but it wouldn't have been what we wanted to do, what it was in the intention. As again, we decided to do this because it's a challenge, not because it's easy.
Certainly a very interesting challenge. And of course, it's something that goes very, very well with the Swiss environment, given the hefty amount of buy-side institutions, the banks, and all of the money that funnels through the Swiss marketplace. So far, explain to me, what's the interest actually been like in terms of building the market? Has it all been coming from Switzerland, or are you seeing a lot of international interest?
Right. We have a lot of support in Switzerland, as you would expect. All our members, our founding members, are Swiss banks. However, 2 weeks ago we admitted the first non-Swiss member, CM Equities from Germany, who will be a full member of the exchange, who is a full member of the exchange and of the CSD. In terms of issuances, we have a fairly solid interest from abroad. However, again, because we wanted to start small, our regulatory remit at the moment allows us only to list companies that are domiciled in Switzerland. So we had to, I wouldn't say that we had to turn away business, but unfortunately we had some very interesting conversations that led to the point where we couldn't take the listing in because we decided to start small and then start expanding in the future. But we had a lot of interest from abroad, especially by foreign-based issuers.
Very interesting. So talking about that issuance piece, I mean, you're the head of digital equities, if I understand it, or at least the Swiss Digital Exchange's head of equities. Tell us a little bit about that role, Max.
Well, it's an interesting role because it goes back to my roots in product development. And Patrick, you and I met about 20 years ago, while we were developing single stock futures, which were probably as much your baby as mine and John Foyle's and all the members of the parish that you very often talk about. So it goes back to that. It's a lot about using products to solve pain points, and again. What are we going to do that is going to give us a step change in the market in terms of adoptions? So it involves a lot of education, a lot of work explaining what the advantages are of these technologies, why the approach is different, and we are focusing predominantly on private markets, which again for me is a bit of a departure because I've always been in secondary public markets, so very liquid products or products that traded in a different way. Here is a completely different world for me. It's very liquid products. It's more about providing a service than price discovery on an exchange. Although we are looking at developing some secondary liquidity in private markets. However, my past experience in building liquidity in products, in building market structures that are conducive to building liquidity, it's coming very handy. Put it this way. So I have a phenomenal team based in Zurich, incredibly driven, incredibly innovative, incredibly young as well. So they make up on energy for when I flag, but it's a mixture for me of old skills and a steep learning curve. I also realized that in terms of digital securities, I'm somewhat considered one of the old guys in securities. I remember being involved in my first project way back in 2015 at the London Stock Exchange, which is only 7 years ago, but in digital terms is eons in terms of where the product was, what we were doing, what we were thinking about, how we were looking at this, and how it is now. So, but it's always a learning curve, and also, again, being challenged. I think it really keeps your brains active and keeps you on your toes.
Very interesting point. Yes, I think actually we can safely say, although please don't sue me, Johnny, but 7 years in the crypto markets is basically the equivalent of dog years partying with Johnny Depp. It's certainly something along those lines. It's quite an incredible, it's an eon, an age in one thing. And yeah, 20 years ago, there we were building single stock futures on the Life Exchange. Wasn't that great fun? It really was great fun to be the advisor to the exchange at that point in time, because yes, I'd been advocating for those things from the mid-90s and everybody thought I was completely bonkers. Although the good folks of Hong Kong exchanges, well, Hong Kong futures exchanges it then was independently with Mark Bettis and all of that team had actually introduced them before that, and I thought it was a fascinating innovation, and well, they're still around to this day and going strong, which is good to see. Let's hope the same can be said of the digital marketplace world. Thank you, HV, for your question. You made a comment. You've also added another question. That's very interesting. I'm going to run this question past you, actually. Now, Max is the head of equities, so to be fair, might not be exactly your thing, and you might not want to give away what's happening in the future, but would SDX also think of listing dematerialized commodities like electric energy, cloud space, CPU or blockchain timestamping services, all tokenized and stably defined as commodities must be?
The answer is yes. And we have a whole department and a whole team led by my dear friend Michele Curtoni, who looks at new products, new innovation, new innovative products, new asset classes, and definitely these are things that we consider. We have a very strict process with which we process new ideas, and but we are an agile company, so considering on a continuous cycle new products, new things to do is part of our DNA. We have a process where we kill ideas all the time. We decide whether we're going to go ahead. Most of them don't make it to past the ideation stage for a number of reasons. But the answer is yes. I mean, we would definitely consider any ideas and any asset class that might have a future and might benefit from our infrastructure.
Yes, benefiting from your infrastructure. And obviously you've got that great Swiss brand and the overall Swiss infrastructure behind you, which I'm sure is a huge boost of confidence for everybody, given the membership and the controlling interest, for example, in the Swiss exchange that comes from your shareholders being all of the banks of Switzerland, essentially, but clearly the major two and others. So tell me a little bit more if we unpack. Thank you, HV, for your questions, incidentally. Very, very interesting to hear from you all together. Much appreciated. If you've got a question, we're here discussing with Max Butti, delivering digital assets. He's the head of equity at the SDX, the Swiss Digital Exchange, which is an arm of SIX, the Swiss Exchange. So tell me one thing, Max. I mean, you're talking about the fact you're concentrating on private markets overall, and it's a little disconcerting because you seem to have disappeared here. Somebody maybe lost a button in production. Oh, there you are, Max. Good to see you again. Sorry, quite worried for a second that maybe we'd lost you somehow or other. So you're looking at private companies in terms of what you're doing in terms of their fundraising. So is that predominantly about equity raising, or is it bond raising or equity raising, or is it simply whatever the client wants to do?
Well, it's clearly is. We respond to client needs and client requests. At the moment, in the equities world at SDX, we have a public market, a normal market where you can list where you can IPO companies, But as you said, we're also building private markets because we think that DLT technologies can deliver a step change in private markets. Private markets are incredibly inefficient. They're incredibly fragmented. Everything is difficult. There is a lot of attrition, a lot of points of friction between different processes and different actors with these processes. By adopting DLT technologies, we think we can smooth out the process and basically take companies in their funding journey through our infrastructure. Ideally, what we would like to do in an ideal state, and this is what we're building towards, is to build an ecosystem that can support private issuance of shares from day one, from the day of the company is incorporated, all the way through to IPO. So if you think about the funding journey, typical funding journey of a company, you have pre-money, then you have seed angel investors or FFF, friends, families, and fools who believe in the idea, and then going forward you have your A rounds, B rounds, C rounds, and then you go to IPO. Now that process at the moment I described to C round is very complicated. Documentation has to be written all the time. Capital increases are very time consuming for the founders and the managers of companies who are actually more involved they should be more involved in growing their businesses than running after placing memorandums and so on and so forth. So in certain of these companies, young companies, need CFOs and an entire staff to support their funding process. So what we want to do, we want to deliver the tools to make that better. So by listing a company on day one, issuing native digital securities on SDX, what do you get? You get a security that is recognized under Swiss law as an intermediated security, a bankable security, a security that is immediately embedded into the banking system. We give you an ISIN code, something that normally you wouldn't get. From that moment on, we have custodian banks who will take your shares and deposit them into the accounts of your investors. Next time you need to carry out a capital increase, everything is already digitized. All the information is already available. All the accountants, all the consultants who work on the placement can find all the digitized trail of information. All the records are immutable. That's one of the beauties of this technology. As I said before, everything is updated in quasi real time. All the nodes of the network are updated at the same time of any transaction, of any changes. And on the back of that, we want to create also, as I said before, some sort of secondary liquidity to facilitate not only fundraising, but also partial exits. We want to start looking at helping companies to hold ad hoc liquidity events where they bring in new investors without necessarily issue new equity, but just exchanging it. One area where we want to focus is the one of share incentive schemes for employees. They are a very powerful retention tool to retain talent in growing companies. They go from the classic option employee option schemes, ESOPs, to different structures like phantom shares, for example. When you have an employee who would like to monetize some of that, or you want to reward them after years of loyalty, allowing them to bank their shares, we want to create the possibility to create secondary markets for them, so they can participate and they can have a transparent process on which to monetize these shares and these options. And the focus on private markets is also based on a simple observation. As you know, the trend in the last 15 years has been that companies stay private longer. There are less IPOs worldwide. The trend is down. Companies tend to develop a lot more value while private than in the past, and there is no efficient way to service that growth. Point in case, in the Swiss market, last year there were 2 IPOs of 2 Swiss companies on shoes listed at Nasdaq, and Sport Radar listed on NYSE. Those companies were private, one for 10 years, the other one for 21 years. So imagine the maintaining a company of that. They both IPO'd at a valuation of 7.5 billion. So they're not small companies. Can you imagine the infrastructure you have to have while you're growing your business to maintain that level of involvement with your investors, with your bankers, with your custodians, with the whole ecosystem who contributes to that? So we are focusing on that because we think that there is a real application of DLT technologies to solve those problems and make life easier for issuers, but also for investors. Because if we can enlarge investors' base, we can create new opportunity sets for them.
So actually, that's fascinating. Let me ask you one specific question, because you've mentioned the fact that you can essentially do the whole life cycle of funding. Essentially, you can join your exchange as a very small entity and you can grow from startup to a mighty acorn, and then you could even take the great leap into the unknown and become a publicly listed security as well. So there's no real minimum size at which you need to be in order to get onto the SDX at the lower end?
In theory, no. In theory, no. There is no size. You could list a company you can list a company right after the creation. You need an issuer agent, clearly, which is one of our members typically. But beyond that, there is basically no other barrier. Clearly, it has to make economic sense for companies to do that. And but yes, that's what we're aiming. That's what we're aiming at.
So clearly, I mean, there are criteria in terms of you want to encourage future growth stocks. You want to get companies that are going to grow rapidly, and therefore you're not looking at the next mom and pop store in Opficon or something in order to come to your market. We get that. That's obviously a logical sense of priority. How about as companies issue their equity along the way? Does that mean that you have a lot less paperwork actually generated because it's an exchange-related process? Let me give you a specific example. The private markets in America have an issue because if you've already done, say, seed, Series A, B, C, by the time you get to Series D, suddenly you're carrying this panfold of paper, which is about the same height as you or I's head, around with you with all sorts of different quotas and criteria and so on. Does that become alleviated within the SDX environment?
Yes, and actually, we tend to validate this kind of things with our potential clients and with our potential users. And again, there are 2 discussions that actually were really. I would say they helped us really focusing on this, and which were two discussions we had with 2 fintech CEOs separately, but one was going through a capital increase, and it took them and they already had, as you described, 3 different share classes. They had preemption rights. They had different shareholder agreements in place. And at a certain point last year, they were going for a C round, and they decided to basically optimize that and basically collapse all the different share categories into one, and so on and so forth. And at the same time, raise fresh capital. They had a very successful capital raise, but the whole process took 6 months. The CEO spent tens of thousands of Swiss francs in legal fees, and at the end, he was left with a pile of 980 pages on his desk. So when we discussed this, we rapidly started to think that perhaps we could do a little bit better than that. And he agreed wholeheartedly, and is probably one of the companies that we are looking forward to welcome on our exchange. The other one, while we were validating some of the business plans, had already done that, had already set up his company in a way that it can be tokenized, and under Swiss law, a company that can issue intermediated securities, which can go onto a CSD. And he reckons that he's going to be saving hundreds of thousands in the next 3 to 4 years as he moves through the different funding rounds. So the answer is, the evidence that we see by talking to the CEOs of some of these companies, of fast-growing companies, is that there is a real benefit. So we are delivering value.
Yeah, I mean, I think it's fascinating. I really do think there's an amazing sales opportunity in there, because there's so much demand for SME equity, for growth equity at every stage, and particularly right across, even if we just take narrowly Europe, there is so much of an opportunity. And given the fact that the European Union, obviously beyond the shores of Switzerland per se, have talked so much about the Capital Markets Union but delivered so relatively little, there's still a huge growth disparity there, particularly given the differences in equity culture between the European markets and the US traditionally, and so on. But if you can compress the fees, that starts to become really, really interesting, and compress the time to market, that becomes hugely advantageous as well. So here we are, ladies and gentlemen. We're discussing developing digital assets with Max Butti. He's the head of equities at the Swiss Digital Exchange. Let me just say a hearty hello to Simon Huckle. It's lovely to see you. Good evening to you, Simon. Thanks very much for joining the show this evening. If you've got a question for Max, ladies and gentlemen, then you have got, well, not much more than 10 minutes to actually start getting in there and asking your question if you want to know something about the Swiss Digital Exchange or developing digital assets. So, Max, you mentioned briefly all about this very interesting methodology. You've got this, let's call it instantaneous settlement, but we all know that what is actually instantaneous always has a little blip of a delay, but it's certainly a lot better than T plus whatever it is, 34,000 seconds, which is T plus 2 days. How does that work in terms of how you've been able to interact with the existing custodial landscape? Because you mentioned you've got your own settlement CSD built into the platform, yeah?
Yes. Is a brand new infrastructure. So we maintain the nodes in behalf of our custodians. The custodians had to basically set up a new infrastructure whereby they have access to our nodes. We could potentially also have distributed solutions where the custodians maintain the nodes themselves. It's a different setup. It has to be one thing has to be said is that we are what in the parlance is called a walled community, a walled garden. We are not a public chain. We have our own private private solution. It is also one of the bases of our regulatory approval. So at the moment, it is an infrastructure that is brand new. So our members who have been very supportive have gone through a very steep learning curve in order to connect and conform to this this infrastructure. But again, at the moment we maintain all that. One day, perhaps, who knows? We might open it to a public chain, but then it would be a different exchange. It would be a completely different proposition.
But it's an interesting one, isn't it? I mean, philosophically, because there's been this amazing drive for ultra transparency, one might say, through having utterly public blockchains, but then they've all run into the same sorts of security problems along the way, despite the immutability of the blockchain as they've gone. So therefore, you've gone for essentially a private, as you say, a walled garden solution. Therefore, presumably, the information is spread amongst a series of participants, but essentially it's still a centralized blockchain that's controlled by SDX?
That is correct, yes.
Mm-hmm. And therefore, there's a lot of people who can observe what's going on, but the final say, or what is finally done, actually falls to the exchange in the middle in order for it to actually sign off and agree to whatever that movement or transaction is. Is that correct?
Yeah, no, absolutely. I mean, like in a traditional exchange, our members sign up to our rules and regulations, our terms and conditions. They agree to perform certain actions. They can decide the permissions that they have on the network and who can do what on the different nodes. But again, they have to conform to our technical standards and to our operational standards. So they have to maintain operations in a certain way in accordance to our rules. So in that sense, it's not different from a traditional exchange.
Yes, I think that's a very interesting point. But obviously, then you're bringing with you the security of how that works. Okay, so let's change gear and just pop back a moment, because we were talking about product. You just piqued me with a thought about the technology there. We're discussing developing digital markets with the SDX's head of equities, Max Butti. So Max, when you look at your exchange and when you look at the user base and so on, you mentioned the fact that your members obviously are essentially the same members as you find from the Swiss exchange. So therefore, you're representing a huge cadre of Swiss and therefore international banking. What has the response been like so far to your offering from sort of the traditional buy-side players?
Well, they're certainly interested, especially the buy-side players who are more into that, more into private markets, and they are looking more at private equities as an asset class, or as a way to, in a certain way, decorrelate returns with some of their other portfolios. So they've been very interested. Clearly, VCs are interested because it helps them developing portfolios that are more consistent in terms of data. We have a lot of conversations, for example, about establishing valuation services for these companies who are clearly private, so more difficult to evaluate. So there's an opportunity on that. But we are building all these services around all these bits and pieces of the ecosystem in order to service exactly this type of investors. The buy side again has an interest because potentially can really lower their cost of access. to these kind of investments. When you are approached by a company that is already listed, has already issued securities, bankable securities on a CSD, has already a trail, an information trail that is auditable, and is embedded into the infrastructure of the exchange, is a much easier and much better experience when you talk to the founders of the company.
That's very interesting, actually. There's several things you've said there that really need to be highlighted, Max. I mean, first of all, and I love it. I'm delighted to hear it, because you mentioned how actually the traditional buy side, well, we know that's going to take some time for them to really get into something like the private equity business, but clearly you can help hold their hand and give them a public style experience, which makes it easier for them, and therefore the valuation services become interesting, as they do on the private side. And I love the fact that you're getting positive buy-in from the venture capital business, because some might think they would be reluctant to participate, whereas it strikes me that actually this is a way to compress the costs for everybody along the side of the value chain, and therefore offer something, well, what exchanges do, providing an opportunity for all human life to get involved in investing in markets. So as a matter of interest, you said you were a wholesale exchange. Does that mean you run to like wholesale tick rules? Do you have to invest in a minimum of whatever, 100,000 Swiss francs or 100,000 euro or dollar of product? Or is it just the fact that to get into the membership and to be a participant, a counterparty, you have to be an institution?
In order to be a member, you have to be an institution. Then the usual rules apply, regulatory capital, the usual approvals by the authorities. And again, in that respect, we are very much a traditional exchange. But again, it's done because we want to maintain a certain consistency, and because again, at the moment we are addressing predominantly the institutional market. So that's then the consequence is that.
Fabulous. Thank you so much, ladies and gentlemen, for your likes this evening. Thank you very much for your questions as well. It's been really, really interesting discussing developing digital assets here with Max Butti. So Max, it is fascinating. It's a whole new institutional market that you're hoping to bring out towards the world. You are, in your own way, playing your own little capital market revolution here in every possible way, day by day. But nonetheless, I've got to ask you the crux question that we ask every viewer, every guest at the end of the show. Where do you think the capital market revolution goes next?
Well, in the metaverse, that's where it's going. I think, and this is very personal, I think that the metaverse will develop from what it is at the moment. A lot of people think that the metaverse is just for kids and gamers. Actually, it couldn't be further from the truth. It's a physical, is a place out there that doesn't have physical properties, but nevertheless exists. It's a world, and in that world there are people who operate, and they're not so naive or wrapped up into these virtual worlds to confuse them with the real world. They know exactly they are not real. However, that they don't have physical properties. However, they don't see them as less important than the real world. In the metaverse, you already have factories who make artifacts and goods that are consumed in the metaverse. Ideally, there could be an exchange that operates only in the metaverse and lists only companies that exist in the metaverse in the metaverse. There will be a need for capital markets in the meta world, in the metaverse. So it's probably a far-fetched prediction, but this is where I think it's going, and it's going to be a lot more democratic. It's going to be a lot more fun as well. But this is where I think it's going.
Well, certainly anything, if you've been a cryptocurrency investor, would be a lot more fun than the last 3 weeks in crypto land. So maybe we all need to be in the metaverse if you've been holding a lot of block Bitcoin recently. Of course, if you're on the blockchain or you're in digital assets, you may not have been noticing the same pain because you're building the markets of the future with the likes of the Swiss Digital Exchange. Thank you very, very much, Max Butti, head of equities at SDX, the Swiss Digital Exchange, a subsidiary of S6, the Swiss exchange itself. It's been fascinating to talk to you this evening. I want to say thank you very, very much to all those who have made their comments during the course of this evening. Peter Secon, Liam Maw, HV, Simon Huckle. We won't make it into the metaverse by next week, ladies and gentlemen, but who knows, we might be coming soon from a virtual place near you. However, we're going to be talking to the fabulous Mac Gill next week, and we're going to be discussing delivering new parish technology for the worlds of exchanges and markets, whether in the metaverse, in the legacy exchange business, or indeed across the digital markets. My name is Patrick L. Young. I want to say thank you once again to Max Butti for being such an interesting guest this evening, coming from the cutting edge, innovative Swiss Digital Exchange. Of course, Switzerland, land of innovation, not merely in watches, but the people who bought you, well, amongst other things, the Alinghi yacht that won the America's Cup quite incredibly a number of years ago, amongst many other facets too. Thanks very much to the production team this evening, Beata, Jamil, Herminia and Jake. My name is Patrick L. Young. Catch the water cooler of the Bourse Business Exchange Invest Daily in your inbox. Ping us on social media and we'll set you up with a free trial if you'd like to watch that. My name is Patrick L. Young. With my guest this evening, Max Butti, we've been discussing developing digital markets. Thanks for watching. Catch up next week.
Thank you very much, Patrick. It's been a pleasure.